and they just turn up. Let's go there. So we should be live. Okay. So every single time you take a trade, all right, you want to make sure that you are either selling in a premium or buying in a discount. Now, let me explain something to you. This is the problem with this. The problem with what I've just said is you have to understand the Russian doll theory. And the Russian doll theory, in a nutshell, is just simply saying that the markets are fractal. All right. Now, what do I mean by that is maybe a visual representation of a Russian doll will help you understand what I mean, because the word fractal starts being quite a big word. What does that mean? Blah, 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 blah. It means this. This is what the markets look like. The markets look like one doll inside of another doll, inside of another doll, inside of another doll. That's what the markets look like. All right. The markets they repeat, but they are contained by each other. What does that mean? It means that down here, this is the 1 minute time frame. It's contained by a 5-minute structure. That 5-minute structure is contained by a larger structure, maybe a 15-minute structure. That 15-minute structure is contained by an hour structure. The hour structure is contained by a 4-hour. 4 hours contained by the daily. Daily is contained by the weekly. Weekly is contained by the monthly. I've just spaced out those time frames just to divide equally on these Russian dolls. But the point I'm making to you is you must understand the larger, higher time frame structure. So, for example, I have zoomed all the way out. These are weekly candles at the moment, meaning every single candle is 1 week in time. You are not trading based upon this structure. You're not sitting around for a week waiting for a candle. I know this. Okay. However, the reason why I'm here, because what this is telling me is that right now, this market, the Great British Pound against the United States dollar, is, even though the market has been falling over time and Great British Pound has been losing strength, it is telling me that we are ultimately in a premium for this market. And when I draw the lines in, they're not trend lines like, oh yeah, as soon as it touches the line, I hit the button. No, the trend lines are a guide, guiding my eye to let me understand where we are in the range. Because markets move in trends. If you don't believe me, open up any chart and just go back in time. Have a look at this chart. I'm just going to go back in time. Have a look. So say, for example, argument's sake, I'm going to do this. I'm going to pick this little spot here. Look. Let's imagine if I go like this, I'm going to pull this all the way back to here. Okay. And I'm going to imagine the date was, or the date is the 5th of June, 2017. And I take my little lines out and I start connecting some dots. Have a look. I'm going to connect some dots over here. Yeah, I'm connecting some data points because these little places here where markets turn around, they say a lot. They said that the market was falling all the way down here and then boom, something happened and it was pushed up. And then I'm going to hold control on my Windows device. I don't know what it is on Apple. And I'm going to duplicate this line, make it an absolutely parallel line, touching on some data points. All right. This is touched 2 data. Let me show you what data points are. Because someone says, which ones did he touch? How is he drawing that? All right. I don't know if I can hide this news stuff. Hide events. There you go. All right. So in this instance, I touched this data point and this data point, and then I just pulled out a parallel line touching the top end, yeah, where I can see it. Now let's hit play. We're hitting play. Now, the one thing I will explain to you is this. As you get new data, all right, so say, for example, the way in which I drawn up that market, those lines, is you must edit your lines. Yeah. Now, remember, these lines are a guide. As easy as they're lines, they could be rectangles. But for argument's sake, let me try and draw better lines because I am all the way here on a weekly, so I'm not getting. So let's say now, can you see how I'm going to take from here? I'm trying to touch some of these data points, and I must touch the last low before the highest point. That's what I'm really interested in. I'm really interested in touching the last low. Like so. So this is a better line now. Now I've been able to zoom in a bit. Like this. Let me get rid of this one. Get rid of this one. All right. I need to touch this last low and capture the energy of what the market's doing. And then on this one, I want to touch the top end. All right. Now let me hit play. I'm just hitting places. This is a random place on the charts, but look how, for whatever reason, the markets are staying within that parallel rails that I've just created. This isn't one I made earlier. I haven't been up first thing in the morning trying to hand pick this one, whereby the market's staying within those rails. Okay. So the point I'm making to you is this. If I was in this trade from here, from 2017, on a basic level, if I'm going to buy and I'm able to draw this range, I want to buy from down here. From down here, I want to buy from. I don't want to sell from down here. If I'm wicked and bad, and I think I can take retracement trades, I want to sell from up here. Let me make them red so they do difference. I want to sell from up here. I want to sell from up here. I don't want to sell from down here. Look, I'm going to put the anomaly in here. I don't want to sell from down there. It looks strange there, that red dot amongst all these green dots. And I don't want to buy from up here. That looks strange, me buying from up here. I want to sell in the premium of whatever range I'm in. Now, as soon as the market starts to break outside of this range, I start paying attention because I understand that markets move in waves. They don't just go in one direction. They go in one direction, then they make a retracement, and then they continue going, then they make a retreat. They move in a wave like this. Oops. They move in waves like this. I understand that. So I'm always expecting for the markets to break outside of ranges. Let me hit play and see what else happens in this. Let's have a look. The market broke outside the range. All right. Looks like it made a little retracement to me. And let me show you another bit of nifty news, nifty information of how we look at our charts and we understand different confluences. I'm hitting play. Let's see what it does. So we've seen a retracement because we understand markets move in waves. And then the market starts to break structure bullishly. Let's have a look. See what happens. Nope, the market's pushing down here. Bearish some more. All right, because ultimately, this market is trading within this range. See this bigger range that we've drawn in here? That's the market is trading within this range. So like I said, can you see this little box that we drew previously? I said to you, this area is an area where the market is in a premium. But the point I really want to make is this is the complexity of it. The complexity of what I just said is this. I'm showing you this premium and discount on a weekly range. It's massive. You're not going to take a trade on a weekly range. So when you zoom in, so say for example, I zoom in now, drop down to my daily. All right, I'm going to try and get back to that same point. Here you go. That daily. Within that daily range, it is your duty to be able to identify, have a look. So I'll just take any random place, for example, here, identify this range that the market's trading within. Because once again, you want to take a trade within this range only, wherever I've written that, I should have made it anchor on the screen, taking buys in a discount and sells in a premium. You do not want to see, you want to be taking buys on the bottom of this line here and sells at the top of this line here. You don't want to be doing anything. Let me zoom in and you'll see more reason why I said that. And go to my 4 hour. Hopefully he's going to give me the information. Should do. Let's just scoot back. Maybe not, because he was going all the way back to 2017, I think. Have a look now. This is me on a 4 hour time frame. Can you see the range? Obviously, I drew it from far out. We can draw it a bit better now. Now, when we're drawing this, we're looking at touching the data points. It doesn't matter when, at what point you start drawing these data points. When you get new information, you will change the angle because it's new data. You can't use old, like the data's coming out. You can't predict the future. You can only go by previous data in your life. You only go by previous data. Do you understand what I'm saying? You can't go by data that you've never even imagined before. Yeah. So therefore, I'm not going to rewind this back because it's going to start getting mad. But for argument's sake, if I was looking at this market here, GBP/USD, and I want to buy, I only, in an ideal scenario, not just want to buy down here, which what we're looking at on a bigger time frame. I only want to buy on this line, on this line, on this line. And if I was wicked and bad and I think I can take retracement trades, which are against the trend, I only want to be selling on this line, on this line, on this line. Now, it seems simple what I'm saying to you, but I'm telling you, There are people that know all type of strategies, X, Y, Z, A, B, C divided by 2, square it by 9. Yeah. But they don't do this. And if I drop my time frame again, once again, even in this instance where I'm saying, okay, I want to be buying on this line. So say, for example, this little line here, let me try and put a range around it. Hopefully, God willing, it gives me the data. So look, if I do this, put a line here, I'm going to make it yellow so we can remember what it is. And I put a little range around here. So I'll pull out this as a range. And I'm going to drop all the way down. It's probably not going to give me 15 minutes, but I'll try. I'll try. No, it does. It's not going to give me 15 minutes. Oh, yes, maybe. Let's have a look. I should have just put in the dates to stop me having to drag it back. So my fault. Let's have a look. Come on, give me the data. Give me the data. Give it to me. Let's have a look. Let me squeeze this up a bit. Is it going to give me a reason why I'm saying that, guys, is as you go back in TradingView, sometimes they stop giving you information after a certain time. So obviously this is because I'm going back and we're showing something historically. This is going all the way back to 2017. Which I'm miles off 2017 now, to be fair. And it might not give me the information. It might just say, no, sorry, we stopped giving you information at 2018, which is fair enough. I mean, that was, look, yeah, see, stop giving me information here. So this has got to an hour. Hopefully that's 4 times less candles. And hopefully it gives me that information. The point I'm making to you is even in that range where I said to you, yeah, we want to be buying on that bottom. Here we go. Luckily, look, even in that. And we was looking at this little range in here. For argument's sake, I said, yeah, if you wanted to sell and take a counter trend trade, you should be taking it from up here in this red. But even deeper than that, if you wanted to be taking it, you'd be taking it anywhere on that line, on that area for a sell. Obviously, this is a counter trend trade, but the same thing with this buy. For example, if we're looking here right now, this market, this impulse, this second leg that I can see here, and that's going into something called Elliott wave theory. If I was to connect the dots, have a look. I would be connecting the dots like so. Look how I've connected the dots touching. I must touch these data points and ultimately the last low before this highest point. All right, have a look. That was the range that it was trading up within. And then within that range, there's another range in here as this market made a high, made a little low, pushed up in here. But only thing is if I drop my time frame down to 5 minutes to identify that range, it won't give us the data. But there is another range in here. Look, I'm going to make it pink. Okay. And the point is if I was taking a trade because I'm a day trader and I want to get in and out of that trade in the next, hour or so. So I'm looking on a 15 or even 5-minute entry. I would still draw out this range using the exact same strategy and understand that within this range, because this work, you have to imagine that every range is like a world, all right? It's like a world. Within that world, look, this market was doing this, move here, move here, move here. Within that little impulse in here, okay, is a world. It's a whole world. It's like a whole universe in here. Within this universe, I again only want to be buying on at a discount. I can see now how badly I've drawn the range, but if I could drop my time frame down, it would give us a lot more information. It wouldn't just look like 3 green candles. It looked like green candles and red candles going up and down, up and down. If I was to be able to drop down to my 5-minute time frame, which I can't do because of how far I've gone back. Yeah, but just take my word for it. Those 3 green candles are going to look like green candles, red candles, green candles, red candles, green candles, red candles. That's what they're going to look like. They're going to look like a range. Like a wave going up. And within that wave, once again, I am not hitting the button for a buy unless I'm going to be on this line. Whoops, wrong color, but you get my point. Yeah, because I always want to be buying at a discount. And then I always want to be selling. If I get to the top of the rate, have a look at this. If I want to sell this market, I'm going to wait till it gets to the bigger Russian doll, this bigger yellow line, i.e. at the top here. Let me make it white, those lines. Yeah, I want to get to here, and I'm going to wait till this market starts making a range, making some lower lows and lower highs, so I can draw in this range for argument's sake. And then I want to be taking the sell from this line here, as I mentioned, in a premium of this retracement. I'm not going to be selling in the middle here, which I do nothing. Yeah, I'm not going to be selling down here where I should be buying from. This is all stupidity. because the market moves in waves. So if I hit a sell down here, the market's going to move. Let me use this. The market's going to move back against me before continuing to come down, because the markets move in waves. So once I understand that I always need to be taking a sell from a premium of any range or a buy from a discount of any range, and better still, you should be trading in the direction of the markets. This trade here, you taking a sell, you basically saying that you're trading against the bigger trend and you're counter trend trading. Yeah, but either way, even if you did that, I'm showing you how to stay safe. If you open up your charts and for whatever reason, the market is here, you just open up your charts at a certain time, the market's here, you're not taking any trades. I don't care what the structure looks like. I don't care what volume looks like. I don't care what the news looks like. You are not interested in taking a trade here. You want your market to get up against this premium line if you're taking a sell. So when this market taps into here, see that wick, and then you drop to a smaller time frame than an hour, then you see the indication, correction, continuation. You're taking your trade from a premium of a premium. All right, now let's get back to current time, because like I'm in the past, I'm not able to shrink down. I want you guys to see what I'm saying in the flesh. And if you don't believe me, go to TradingView, which is free. Open it up. Open up any random charts and start saying to yourself, okay, let me simplify this. Let me do what Jay says, which is based upon market structure and price action. And it's to do with psychology and human behavior, because this is a market. In a market, if everyone starts crowding around one store, you know what other people do? They stop, and they start crowding around. And other people start crowding around, because everyone's got this FOMO, wants to know what's going on. Everyone believes there must be something good there because everyone's crowding around a particular store. It's human behavior. How does that refer to the markets? That refers to the markets like this. When we are here and this market is, for argument's sake, we can see how the market came up to this level. I'm just randomly picking up a place. Market started to go sideways a little bit in here. Okay, and you have to be able to identify the cycles of the market. So for argument's sake, the market started going a little bit sideways in here. All right, making equal highs and equal lows. And then we saw the market indicate here. Have a look. Indicated outside of the market what it wants to do. Pushed up to 50%, which is another bit you understand that Jay tells you multiple times. If the market comes back and taps into consolidation, once it doesn't break 50% of that previous consolidation level, it wants to continue going in the direction indicated. If this started pushing up here, indicating corrected up here, well, yeah, it's doing something else. It's going to capture the liquidity on the other side of this range. But have a look. When this market starts to come down in here in this range, look, I'm going to draw a little line here. As it started to come down, I drew this little line. I take my whole control, I pull out an absolutely parallel line touching this lowest data point. Now, is it a coincidence that everything was contained within that range? It's not a coincidence. The market moves within ranges. Now, there are ranges within ranges. Like if you was on a much smaller time frame, you could have put a little line in here. As you see in this market, respecting this range, but it's the same angle. It's the same range. Yeah. So I'm saying to you, if I was in this energy here, I happen to be at this market here, I am taking a sell from here. From here. From here. I am not selling from here. Not until this market does something mad and breaks outside of this range, corrects, and does this. This means I've got new data and the market is now accelerating. Watch. That the market is now accelerating bearishly. And therefore, I would draw a new range and start respecting that range. Start expecting the market to make a retracement within that range and then come back down. And then make a retracement within that range and then come back down until it decides to do something else. So right now, we can see how the market has chosen, if I get rid of this, get rid of that, to start doing something else. Look, it came all the way down to the, that's why, look, if I was thinking to myself, yeah, this is going to reverse, this market is going to reverse, going to reverse. Ideally, this is the source. I'm giving you the source. Ideally, that reversal, you wanted to take it when it hits the bottom end of that demand zone, when it's in that area for a buy. Here, you'd be interested in a reversal. Here, you would have been interested in a reversal. If for argument's sake, you just thought, because I haven't looked, I'm just saying that if we look back here and left, we can see some great candlestick zones, some great areas where you think the market's going to reverse. You still want to take that trade from when it hits your demand area, your discounted area. You want to be looking at it from here, thinking to yourself, and if not, you want to be waiting until it confirms that look, because the first time, if for argument's sake, you thought it was going to come here, look, it came up to the top of the range. No, it wasn't ready to break outside the range. Cool. You still made great profits. This was still a completely risk-free trade. You're still over the moon. But it didn't. It said, no, Jay, I'm staying within the range some more. I want to get a bit deeper into whatever data is over here. And there is data over there. I know what it is. Yeah, but we'll look at it in a minute. All right. The market's come all the way down here. Boom. At this point in time, if you zoom into here, we drop down to our 15-minute time frame for argument's sake. Have a look. The exact same strategy. This isn't one I made earlier. This is what people in the morning don't understand. This is what the value of Breakfast Club is. It's easy for me to have a Discord and start putting some stuff in a Discord. It's something else when we're here live in the morning and we're looking at these markets and we're looking at what's going on a daily basis. So have a look. If this market was trading in here, I can see this market doing this. Watch, look at the angle. I'm going to make it yellow. Or green. The market was trading within this range. And then it started to accelerate into a direction. Watch here, look, touching the data price. Now, how have I drawn this? Why is that green line in that angle? Because I must touch this high before the lowest point. And on this time frame, that is that high before the lowest point. Have a look. That is the high before this lowest point. Watch. It was trading down within this range. If I zoomed in, which I'm going to do to show you how fractal these markets are, let me go to a 5-minute. Data unavailable. Why would the data be unavailable? We don't have historical data for the resolution. Why? What day is this? Oh, yeah, sorry, guys. We're still in 2019. I thought we actually got to the present time. We're still in 2019. But trust me, or furthermore, you might even be able to see it. You can see here how within this range, have a look. This market was, if I was to draw the ranges, look, bearish down here. There's a range in here that I can't be bothered to draw with my lines. Then it came up here, kind of went sideways a little piece. There's a range in here. Then there's a range in here. So I'm talking about this last range between the last high of this bigger time frame to the lowest point. There is a range in here that, for argument's sake, you could draw the lines here. Let me draw where it accelerated. Look, the market accelerated here. I'm gonna make that a different color so you can see it. I'm gonna make it yellow. All right. The market accelerated. If I could drop my time frame down to my 5 minutes, you would see this as a beautiful wave, making lower lows, lower highs, lower lows, lower highs, lower lows. So on that time frame, let's imagine that's 5 minutes, but it's not going to give it to me. I've tried, look, and look, it's giving me air. Look, data points unavailable. But let's imagine that you could see this, because I can see it. I don't need to drop to 5 minutes. I can see the range. The wave is like this. Watch. This is what the wave looks like. Lower low, lower high, lower low, lower high. That's what the wave looks like. I know this because I can see it. So therefore, watch. Look at the strategy. The market was trading within this range until it decided not to. Watch. Boom. What is this? What is this break over here? Somebody knows the strategy. What is this? Indication. Indication. This big green candle that closed above this high. It closed. It didn't just wick. It closed above it. Is an indication. This is our strategy. Indication. It's part of our strategy. All right. Then what are we expecting after the indication, G-Van? True, you're on fire.
Correction.
Correction. That's what this red energy is here, coming down here, pushing down here. I know on a smaller time frame, this wick came and closed in balance. That was sitting in between these three green candles. I know this for facts. And then after a correction, what are we expecting to see?
Continuation.
A continuation. Closing above that wick high over here. Now I know on a smaller 5 minute time frame, there is a lovely candle close in here. Even if there isn't a candle closing in, you're going to take the 15-minute candle here that closed. That is your trade. Have a look at it. Execute your trade. Stop below the last low if you're wicked and bad. Below the lowest low here for a safety entry, for the safest entry. But I'm telling you, on a smaller time frame, there is a entry about here. Facts. And even on a smaller entry than that, there is an entry down here and here. There's an entry because you know why? Let me explain why. It's so simple. Because exactly what we do, the same strategy over and over and over again, is that in this little range where the retracement was happening, yeah, Stay with me. In this little range where the retracement was happening on a smaller time frame, there's going to be another indication in here. Indication, correction, continuation. Now, this one's a bit risky because you haven't broken outside of the green line. But let's imagine, for argument's sake, that candle came and closed up. In fact, let's just keep it here to here. Let's leave it here. So I don't want to get too advanced. There's your entry based upon the strategy, especially if the market was bullish. Okay, which I don't fully know. So I was just looking at this element of the strategy. And look, winning. And where are we going to take the trade to? We are going to be taking the trade to our larger, higher time frame Russian dolls, because we understand that market, wherever I was, somewhere in 2000. Now look, we understand that this market trades within a range. So if I take a trade from in here, I am very, very interested. I'm like, listen, I am definitely taking my profits or protecting my position when we get up to the top of this range, because I'm expecting it to hit the top of that pink range and decide it wants to come back down here. That's what I'm expecting. Actually, tell a lie. Let's have a look on a bigger time frame. Yeah, but I haven't got all the lines in because obviously we just jumped in on our strategy. We jumped in the middle of our strategy in 2019 somewhere. All right. But I hope you understand my point. My point is that the market's fractal. You always want to be taking a buy from a discount and taking a sell from a premium. Always. So therefore, how do you do that? Let me start again. Let me show you one more time for the people at home, for the people in the back. I would take my market, and I don't care. People turn around and say, you see some traders and they do not analyze the charts back in time. They don't. They will start doing that. Let me close this, sorry, because I'm still not getting all the data. There you go. They will start just analyzing the last 4 hours. Well, good for you. But what happens if, for argument's sake, you're analyzing the last 4 hours, and because you haven't looked at the higher time frame, the bigger time frame, that you're at a daily ceiling or you're at a monthly ceiling? Like, 4 hours is not going to ramp with a monthly ceiling. You're not big and bad enough to ramp with a monthly ceiling. So I want to see everything. It takes me 2 seconds to zoom all the way out. I'm not taking monthly trades, no, but I know that this is the trend line of the month. This is the general energy of this market. Why would the market keep respecting taking these 2 data points? Why would I have a third bit of respect, a fourth bit of respect? Yeah, this is the premium area where people think just, oh boy, GBP USD has been falling. Yeah, but still too expensive right now for me to buy. I'd prefer to be buying down here. Or furthermore, if I want to sell, yeah, man, all the way down here. Man's like, nah, I think we could probably get up a bit better. And he'd be correct. Or she'd be correct. Now have a look at it right now. It's got to go to it. Now we can get the data because we're in present time. On a daily structure now, okay, this is the highest point here of this impulse. Understand what I just said. The market was coming down from here, made a low, a lower low, then it made a lower high. This is the highest point of that impulse. Therefore, let me identify that range. How have I drawn this line? I must touch the last lows before the highest point. That's why the line looks like that, because it's touching those last lows. The top end, I can put that top end all the way over here, because that's where the range was when we made this impulse. But for whatever reason, because things change in life, the range narrowed up a bit. Got a bit narrow in here after it made this retracement, sideways action, and impulse to get. Who cares? I don't care about the top end anyway when the market's bullish. I care about the bottom end because that's where the structure is going to be. And then we see the market broke structure. Look at the structure. Here's a low. Here's a swing low. Here's a low. The market broke structure. Indicated what it wanted to do. It wants to go this direction. Why does it want to go in this direction? Because we're in a premium. This big yellow line is a premium. That's why it wants to go in that direction, because this thick yellow line is the premium. So it broke through structure. Just imagine, to break through structure, you're going to have to smash through, figure out a computer game. You're going to have to go through 2 different bosses. This went through 2 bosses with no issues in this direction. So that means that for whatever reason, you want to go in this direction. You're going to take the difficulty of smashing these 2 bosses if you don't want to go in this direction. But then because the market, we understand how it moves, indicates, it corrects, it continues. It needs to take a breather. The market corrected. Now, there are certain levels, 618 areas, 50% areas that markets correct to, but this market corrected up into this level. And then it started to go sideways. As it started to think to itself, yeah, boy, we've done our correction now. Woo! We've got some work to do now, but we've cleared the path. Shall we continue? Shall we continue? And the market said, you know what? Let's do that. So what it did is it went up here, watch it, nam, 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 ate some liquidity above that range of where it was going sideways in here. It ate some liquidity. Let me drop my time frame down so you can see better. This would have been my box. It would have gone to this little highest point. It'd been in here. The market was going sideways in here. Look, coming down here, respecting the range. Then it came up here and made a distinct nam, 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 nam. If I was around on Friday, which I believe I may have been, all right, and I saw this come up here, I might be thinking to myself that this is going to be an indication, it could be, to indicate, to correct and continue in this direction. Now, I'm thinking to myself that probability is no, because we're near the top of that range, top of that premium, that big, thick yellow line. But maybe it wanted to push up a little bit more. I don't know. Maybe my way of drawing this yellow line, I'm a little bit off, and it wants to actually get over here before it decided to turn around. So it's all possible. So I watch, I wait, and I watch. And what do I see? I see the market indicate, boom, make a closure outside the range. I see the market correct all the way down here, but then it does something strange. It breaks past that previous little bit of structure where it's indicating down here, and then it starts, I'm thinking it's making a continuation. No, it does this. So therefore, this isn't an indication, correction, and continuation. This is a liquidity grab. This bit here is a liquidity grab. Because if it wanted to keep going in that direction, it would have corrected and continued. It didn't. It pushed right. So as soon as I start seeing that now, of the market breaking this structure, look, on a smaller time frame, this is a closure below here. You don't believe me? Let's have a look. In fact, let me do something real quick. We can draw in our range. This is the big, and if I was to draw these ranges, this is how I would draw them. Watch. Firstly, it might have been like this. Now, this is me not, cherry picking how I'm going to do this. This is me being real. This would have been the range at first, as this market touches these data points here and here. And as this market started to push up in here, I'll go, okay, it's accelerating in that area. Here to here would have been the new range. Watch me pulling out a parallel line again. Look, that would have been the top of the range. And in here, can you see all these green candles? Watch when I drop my time frame down to 15 minutes. Where are you? Where are you? Where are you? When I drop my time frame to 15 minutes, all of those green candles then become a lovely wave, if I can find it. Yep, here we go. See? All of those green candles now, look how beautiful that wave is. Look, up, down, up, down, up, down. Now, because I've zoomed in, I can draw this line a little bit more accurately, a little bit cleaner. I'm not going to bother redrawing it, but it's a little bit cleaner now, being a bit tighter to what's going on. Can you see again how the market accelerated? Look at the new range. Now I've zoomed in. There's another range in here. Look at that range. It's like this. It's from down here to like that. Let me make it a different color because we're getting confusing. And then I'm going to take out a parallel line. Look. Pop it on top. So therefore, if I'm thinking to myself, yeah, boom, I want to get in for a sell here. Look at a great place where I could have sold from. I could have sold from the premium up here. If on a smaller time frame, I got what I was looking for. Okay, but the market pushed up in here. I'm going to drop my time frame down afterwards to show you an even smaller entry. But let's just stay here on a 15-minute, which is a very conservative entry for a day trader. The market pushed up here to a premium, came back down to a discounted area. And now, remember, on the bigger picture, we've just popped our head above this consolidation. That's what this big orange box is. So right now we're thinking, is this the indication, correction, continuation? Or is this a liquidity grab? The market comes up here, makes a high, comes down here, then starts to just think about it. Go, you know what? I'm not sure, I'm not sure, I don't really know if I really want to go back up here. I don't know. So we're watching it again in this consolidation. And what does the market do? It indicates. It makes a correction to 50%. It comes and closes down here. Now, when you're more advanced, you can see these things early and decide to hit the button from early. But even if you didn't want to and you wanted to wait till it broke outside of this orange range, we make it a different color because we've got a few orange ranges. Blue range. then have a look. At the point when it breaks structure over here, indicates this is all correction. At the point when it closes back down below that level here, that could have been you saying, Jay, I'm in. Above the last high is an aggressive entry. Above the next high, wherever that may be, is less aggressive. Above the highest point is the most safest entry, but it's low risk, lower reward. Now, what I normally do in educational sessions, I put all of them in. So I'll put like this being your high risk, high reward entry. I'll put one right beside it saying this one's going to be your medium risk, medium entry, medium stop. And this is going to be your low risk and your low reward entry, because I cannot tell you which one to do. One is going to require you to have like this low risk entry. You're very possibly going to get stopped out and have to get back in, but the rewards are going to be considerably greater than one that you didn't have to do that work. And I don't know if you can do that. I don't know if you go to work in the day. I don't know if you're in front of your computers. I don't know if you can react to your alerts or not. But let's have a look and see which one won and which one didn't win. Look, all of them won. But so therefore, that lower risk entry would have been the more, so that higher risk entry would have been the more lucrative, because have a look at it. Let me zoom out a bit because I can't be bothered to think. Look. Look, it's gone to hell. Now, whether you'd be in here all the way down to here is a completely different question. But the point I'm making to you, how was I able to pick this entry here as a smooth entry without getting stopped out? Because I'm waiting for the indication, correction, and continuation after the market breaks structure. Because then that becomes a Russian doll that the markets have to respect. Look, when this market was coming up here like a meteorite, look, for whatever reason, could have been news, could have been FOMC. I said FTM, could be FOMC, could have been any news, CPI. The reason why this market decided to go mad, but it still put some respect on the structure that you put your stop loss above, because it's a bigger Russian doll. Look, you can't get too cheeky, you know, if I contain you in this doll. You can only get as cheeky as to the ceiling of this doll, unless you got some real gusto and somehow you break out the top of this doll, and then that's something different. But look how the market comes up in here in these levels, puts some respect on the structure, does not break it, keeps our aggressive entry in the trade, and then goes through it. Goes through it. And if you had a bearish bias, ultimately, you're like, listen, I want to sell this market because we're right up in a premium. I really want to get into a sell. Maybe you did hold this trade because you're expecting it to get down to this structure and potentially even this structure. Oops. Because on a larger time frame, you looked at this market and said, Jay, I'm not going to lie to you, I'm bearish on GU because we're in a premium. We've been trading within that bigger range, those two yellow lines, and I'm expecting this market to keep going, and I'm willing to stay in it as this market keeps going and breaks these structures. And if you said that to me, I'd say, wow, I get you, bro. I mean, whether or not you should have the stomach for seeing your trade go all the way into $2,000 in profit and then retracing all the way back to $300, that's down to you. But your overall energy, I get it. And that's what I've said. I've been saying, rewind the tapes, go on YouTube, look at it. I'm saying I'm bearish on this market until it does something else. Then you got to start thinking to yourself, fundamentally, Great British Pound, can we see it getting substantially stronger against the United States dollar? Off of the back of what? What reason? Maybe we raise our interest rates like crazy. Where are we going to raise it enough compared to how America's interest rates have been rising? They've been raising, and how strong their economy is to make this market turn around, so that we start seeing this happen. I don't know. At the moment, I can't see a reason why. I can't see a reason why, unless the US dollar gets so weak, because something we can't see coming happens. And let me tell you something, that happens, we got bigger problems. the United States dollar are the reserve currency of the world. So for me personally, this is coming down here. And Great British Pound, your little pounds in your pocket, as you know already, go to the supermarket with your pound, see what you can get with a pound. Nout. Probably a pound buys you one of the bags. Would you like a bag for a pound? A bag for a pound? You sure? Well, the same bag I used to get for free. Go and take your pound and go and see what happens to it. It's losing strength against everything. So in my opinion, this market should be coming down here. Now, if it doesn't, because I don't have a crystal ball, I'm just going to read and react to what it does. And that's it. This thing's not complicated. It gets complicated because we are impatient. We are greedy. We want to take a trade, even though it's not in the right place. It's not in a premium. Like, for example, right now, watch this. Just looking at how we are right now, just as I've just opened up this chart and I've seen this market here. We haven't rewound, okay, yet. Watch. I would get that top end, draw a line like this, trying to touch the data points properly, like so. And then I will take a power hold control, take it down to that bottom end, and say, this currently is my range. Therefore, if I wanted to sell this market, now would be a good time. I'm in a premium. I'm in a premium of that blue range. If that market keeps trading within that range, it should get all the way down to the other bottom line. So therefore, now my next problem is now I need to just find an entry. So I'm going to drop my time frame down, see where I go on. Look at it on this hour time frame, how this market was trading up within this range. Yeah, it was trading up within this range. Why have I drawn it like that? Because I must touch the last low for this highest point, and I could find a smaller range. Look, I could find a smaller range touching this last low here. Have a look, making an angle like this, touching that last low. Look, I can keep doing this all day long. So therefore, what am I waiting for? I'm waiting for the markets to break, indicate, and close below some structure. Look, this is a closure. From all the way up here, this is a closure below some breaking some structure. Everything else here is correction on a larger time frame. I'm waiting for a continuation of this market to close below this level. But even in that, if I'm more advanced, I could get an entry at the point when this market starts to break structure again after the continuation. That's after the correction. So as this market starts correcting, if I believe it's actually going in this direction, after the correction is going to come the continuation. And if I can see this market here indicating, which is just done, breaking structure there, correcting and continuing, I could get an early entry right there. Could have been my early entry. Could have been an early entry. And if I'd taken that early entry, look, I didn't even see that, guys. This market was over here. The chart was over here. For all I know, I could have gone at that and I see a big spike stopping me out. But it didn't. Look, down here. Every time. If not, if you wasn't able to get in there, you would have been waiting for that correction closing below here, and then you'd have to place your stop at the point of where the correction turns begun over here. You would have been once again in the money, or you would have waited on a smaller time frame of when it broke below this level, indicated, corrected, and continued. Look, let me show it to you. Even though I can't see it, let me find it for you. Market indicated below this structure point here, this blue line. Then it corrected, then it continued. An extremely, and I'm saying extremely aggressive entry would have been when that closure of that candle there above this last high would be an extremely aggressive entry. Why? Because the market might decide to kick back past a 5-minute structure. Maybe it wants to go and tap into a 15-minute or an hour structure up here. That's why this is an aggressive entry. But look, in this instance, you're lucky. You're good. 1 to 3. Shall I show you on a 1-minute time frame? Let me show you the 1-minute entry. The 1-minute entries, as that market, for argument's sake, indicated here. This is what we said was an indication on a 5-minute. Indicated, corrected. I could be looking at the top of the correction, waiting to see it. When in this impulse are we going to break structure? Here's structure here, look. When are we going to break the structure? Look, broke it, close below it. When are we going to correct? Look, correct it. When are we going to continue? Look, continuation. Have a look at the 1-minute aggressive entry. And though the market decided at some point to start going sideways because it might have come up against a bigger boss than 1 minute and had to think about its strategy, started doing a little hokey cokey here, didn't come back up here. And ultimately that trade, that same trade now is like a 1 to 15 because I took a 1 minute entry. The other one was like a 1 to 6 or 1 to 7. And as you go up the time frames, your reward gets slightly less, but so does your risk. Because this could have just as easily decided, you know what? We want to go and tap into some 15-minute structure. And therefore, your 1 minute little Russian doll can't say nothing to 15-minute structure, to 15-minute energy. Man, it's like you know when your cousin goes, "No, I'm gonna go tell your older brother." It's like, right, he's superseding you. He's going above your head. You can't do anything. You can't say anything. Your older brother's gonna give you a slap. If he goes, "Yeah, I'm gonna go tell your younger cousin," he said, go tell Jermaine. I don't care. I'll slap Jermaine. It's the same with the structure of these markets as you go down the time frame. Hence the reason why you must understand who is granddad, who is dad, who is older uncle, who's your older cousin, who's your brother who's born older than you. And then oh, these guys are here, my younger cousins, screw them. They're not going to be able to do anything when it comes to my structure because they're smaller than me. But people are trading don't understand this. They think just because they got a 1 minute entry over here, that I'm going to keep going all the way to start smashing through free, uncle, granddad, everybody with no issues. And then when they get stopped out, oh God, I was stopped out. How comes it stopped me out? Well, it stopped you out, bro, because you didn't buy from a discount anyway. And plus, you didn't respect the fact that your bigger uncle trend is actually going down. I'm telling you. I'm trying to explain it in the most simple ways. Don't believe me? Go back test it. Go and test it for yourself. Go and have a look at any markets. See it do the things. Forget about all the other fraff and noise and indicators. Just go and look at market structure, price action, and understand how to get in and out of the charts, where to place your stop loss, where to put your TPs based upon market structure and price action. If the price action changes, I must change. How am I going to know if the price action is going to change in the future? I don't know if a bomb goes off in a financial district in some country. If that happens, the markets are going to change. If Putin decides to say something mad, the markets are going to change. If some mad news comes out and everyone gets it wrong and, I don't know, someone says something crazy in a speech, something's going to change. When that changes, I change. Yeah? Have you understood? I know there's only a couple soldiers on the call, but have you understood how I've broken this down in some serious detail?
Yep.
Like anybody else, did they get it? I know G-Van's here and he's with it, but I want you guys to fully digest what I'm saying. Like right now, for argument's sake, have a look at this right now. I'm on the 1 minute time frame. So if I'm on a 1 minute time frame, I'm just showing you something, and I'm interested in getting in this trade for the sell, for argument's sake, I might do this line here and do this here. All right. Now, automatically, there's a bit of an issue. The bit of an issue is I'm a bit in the middle of the range a little bit. When we know in the middle of the range, the market can do anything. It could go back up here. Now, there is a smaller impulse that we can see happening like this. This market, after this consolidation, understanding the cycles of the market, after this market decided to go sideways in here, I can see it going sideways. I can't ignore it. I'm not going to play dumb to it. Look, it done the same thing again. It was going sideways. And then before it made its move, it decided to take the liquidity above that sideways range. This here is a liquidity grab, tapped into the top of our line, and then started to go. There is an entry somewhere up here on a very small time frame, but I'm going to have to get very small. But let me tell you something, even if I got down to the 15-second time frame, I'll show you the entry. Its only problem is it's so windy down there. There's so much going on. It gets mad. Yeah, but have a look. Even in this impulse here, I'm going to have to be able to just try and draw some lines in. This would be my first lines I'll draw in. Kind of like this. Kind of like that. And also, based upon what I can see, how can I draw this one and how can this become a top? This can only be a top data point if the price has broken the previous structure. So now I can see it kind of breaking it. I can do this as a range now. So actually, this range is like this, holding control. This is the range. You see? So if I was to take a trade, I have to understand that I have to place my stop outside of the premium. If I was to take a sell right now, hit this button here, and I decide to place my stop just here, what happens if this market touches the bottom of this? Let me make it a different color. Touches the bottom of that blue-green range and decides it wants to come back up to the top of it to a premium. Well, I'll get stopped out if my stop's just here. Do you get what I'm saying? So that's why I always want to take a trade in the premium, whereby the market shouldn't be coming back past that green range. But if I take this trade right now, this market has the right to say, to tap into this little green line here and then start coming back up into here. Oops, just stopped you out. And then deciding it wants to come back down here. It has the right to do so because you didn't take the trade from the premium. So if I do take a trade and it's down here, for argument's sake, my stop has to take that shit into consideration. Has to take into consideration the market wants to get back into a premium before getting back to discount. You just got to hope that it doesn't want to go to this white premium because you're in the middle of the range. Now here at the top of the range, I'm a lot more interested and excited about this trade from here because we're at the top of the white range and the top of a potential new range. So from there would have been the ideal place that I got my what? Look at it. Indication, correction, continuation. Pow. I'm in, mate. Candle closed. I'm in. If I want to be really safe, my stop's there and it's outside of this white Russian doll. Look, I'd be laughing. I'd be safe. I would say, look, that entry that I took right there, yeah, it's pretty close to this premium. It's pretty close to being as premium as it can be. And don't get it twisted. There is an entry right here. Right on that line up there, there is. But it's on a very small time frame. We're talking about seconds, 5 seconds, 15 seconds time of the market coming up here, indicating, but not correcting, but not continuing, breaking structure bearishly. There's your entry. There's your stop, you know, could be well above outside the premium area. But it's higher risk because you're in such a small time frame. The wind could blow. The market could take a little fart and it might decide that it wants to, and then go like that. And therefore you might get stopped out because of your spread, etc., etc. Guys, it's so simple. Simple but not easy. All right. Good morning. God bless. We've had small numbers this morning, but I love it because the people that we got on here, at least we can engage. And like I said to you, I'm here regardless, sharpening my tools. You understand what I'm saying? Yeah. Pause. Yeah. It's like, so on that basis, you turning up and you understanding what I'm saying to you, it might just be one thing I said to you this morning. For somebody that's watching this video back on YouTube, it might be just one thing that I've said that's going to resonate with you to be like, oh, snap. Something's just clicked. Just one, not two, maybe just one thing that's going to make the changes to your trading. And when you start doing it, like I said, you can start doing it live, or you can back test everything I said. The video has been recorded. Watch the video back. Go and back test it on your favorite pair. Back test it on US30. Back test it on UJ. Back test it and see, does this market indicate correct and continue? Does this market trade within a range once I can draw these data points and pull out a parallel line? When I get new data points and I correct that angle, does that market trade within that new range? When that market breaks outside of that range and indicates corrects and continues, can I draw a new range? Does the market respect that range? Okay, so therefore, if I'm buying and I bought at the bottom of the range, from the bottom line, and I sold from the top line, would I have made money? Yes. If it's yes, all those things, you just need to apply that to the live markets. That's your strategy. FUCK, all the rest of the strategies. Understand that. Because let me tell you something. This way in which I teach you guys every single one is better than me doing this. Yep, guys, click this. I'd like you to add this on your screen, that on your screen. Yep, now you've got all of these things happening. We can put some of this, just sprinkle a little bit of that on here with this. Oh yeah, make sure this is on here and make sure you activate that. And then you divide this line by 2, you know, add this one. And when it comes into the SP130, then you take the consequent, you know, division of this level. You'd be like, what the hell, bro? Wouldn't it be better that you can survive in the world just with your 2 hands? Opposed to, you can survive in the world if you had this massive box of tricks that you may not have. You can survive in the world via market structure. Look, there's indicators here that say, look, smart money concepts. Let's use this as an example. This is supposedly some indicator that somebody's created, because anybody can create an indicator. I can create an indicator for my strategy. Don't get it twisted. Especially right now with ChatGPT, I can do it in probably about 15 minutes. Yeah. Showing you highs. Look at this. High, low, lower lows and lower highs, showing you change of characters, showing you all these things. You don't need it. You can see everything that's on this chart, you can see it with your eyeballs. So if you don't happen to have this indicator, you can see everything with your eyeballs and go and trade the markets and win, be a winner in life. Yeah. Without having to have all of that nonsense. And that's what it's about. Guys, good morning. God bless. I'm going to put something on YouTube to keep it funky. All right. And I'm going to let you get on with your day. Sun is shining. You got air in your lungs. That means that everything's going good. All right. That means that all things are possible once you